And I agree with that 100%. I mean, it's all about the right time for you as the consumer. And there is going to be a right time. Right now, I feel is a good time for those people that didn't have the reserves and have that big capital to come in and offer $100,000 over asking. Yeah, they're paying a little bit more in an interest rate, but they're not paying that big lump sum right up front. So it's all really about, for me, timing of my buyers. And I think this is still a great time for my buyers to buy because they're getting in, like I've said over and over again, and getting a quality house instead of just kind of dealing with what they could get in a competitive market. But like you're saying, it has to balance out as we're crashing the market, so to say. The only way to bring it back is to lower those interest rates. And with those lowered interest rates, it's going to bring up the demand. And there we are again, having those same competitive situations, $100,000 over asking. So is now the time for you to get in and get a quality house and win that contract and refi in the spring when it drops down? Or do you wait until it crashes, that perfect time? I mean, I don't know about you, but the batteries in my crystal ball died years ago, so I'm not exactly sure what's going to happen there.
Welcome to the Uncensored Real Estate Podcast, where nothing is off limits. If you're interested in buying, selling, or investing in real estate, and you want to learn some of the insider secrets and uncensored truths from the true professionals in and around real estate, you've come to the right place. Now, let's buckle up for the uncensored truth about real estate and join your host, Brian Cardenas.
All right, everybody, thank you for joining us on the next episode of the Uncensored Real Estate Podcast, where nothing is off limits. We're going to talk about whatever the hell we want to talk about today. Today, we're being joined by a special guest, Dallas Haldigo. He is with Exit Realty. He works out of Denver as well as Florida. And so first of all, I wanted to say welcome, Dallas.
Hey, how's it going? Aloha, everybody.
This is the Hawaii guy. That's right. So we'll kind of go in a bunch of different directions, but I wanted to remind everybody that we'd love to have you subscribe and click on the notify button if you're checking us out on YouTube, and subscribe and give us a 5-star review on whatever podcast platform that you're joining us on. And just kind of want to start things out today, Dallas, with you is just kind of give us a state of what you're seeing. I mean, it seems like this entire year has just been full of volatility and changes and craziness. And so, as we're talking here in the middle of October, what are you seeing in your area in Denver and in Florida?
Well, like you said, lots of volatility. I mean, the beginning of the year was absolutely crazy. And as we kind of come into the fourth quarter here, we're starting to see things slow down a little bit as far as just listings spending a lot longer on market. I think a lot to do with the correction and the recent interest rates. Starting to see listings sitting on market just a little bit longer. They're still moving here in Denver, but not moving in that week to 2 weeks like they were before.
Yeah, I think it's just time to reset expectations a little bit. I mean, we all got so used to things going so quickly with all of the competition and the FOMO that was going around. And now we're kind of getting back toward a little bit more regular market. I mean, houses might be on the market for 30, 60 days before they get under contract. And that's a hard pill for people to swallow these days, isn't it?
Oh, yeah. They got used to, putting on market and then 3 days later they're under contract. I mean, that is kind of an unrealistic thing right now, and I would wish I could erase that from most people's memory because it is coming back to more of a normal market, which is good. It's good for the buyers as well, because now they could actually get into a property, get their inspection items fixed up, not have to waive that appraisal, not have to bring so much money to the table. They're actually getting into a solid house, which is a great thing for buyers. Yes, the interest rates are a little bit higher, but it's a certain place and time for everybody.
Yeah, I think that's a really good point that you kind of brought up, is all the things that buyers are able to do. I mean, a lot of buyers in the market just completely got shut out over the last, 2+ years because, they didn't have tons of cash extra to be able to put down. A lot of our first-time home buyers, that might have needed down payment assistance to get into a place because they hadn't been able to save up, tons of money. They weren't selling a house that, had appreciated 30, 40, 50% in the last couple of years. And so, what are the big opportunities that you see right now for buyers in the market?
Oh, well, that's just it right there. I mean, especially my first time home buyers that were struggling and pretty much competed. I mean, they were competing so much before they couldn't have the opportunity to actually win a contract because these houses were going 50, 60, 70, 100,000 over asking. Now they're able to actually get in there and win offers. Where most of my first time home buyers, down payment assistant people, I've recently got under contract because there is less competition. They're actually able to get in there and win an offer and have the opportunity to get their inspection items fixed. So for me, that's a win for my clients. It's kind of what I'm seeing a lot of right there. And I kind of got sidetracked to what I was saying.
That's okay. So when you're talking to buyers in this market, what are the fears that you're hearing from them, or what are the concerns that might be keeping some of them on the sidelines?
Well, a lot of them hear everything about the interest rate. They're like, oh my gosh, the interest rate, the interest rate, the interest rate. Are we in a bubble? Are we going to crash? And a lot of my advice as I talk about is that the market is correcting itself. It can't continue to go up, to go up, to go up, to go up, to go up. It has to level off at some point in time. And I feel that that's what's going on right now is we're correcting ourselves. The market is correcting. So you could always refinance a little bit later on down the road is also what I tell my buyers as well. But now is an opportunity to get into a house that you actually love. You could get into it and get everything fixed up the way you would like it to within that inspection objection deadline time. So they're actually getting into a decent house without having to pay that over asking price. And then you'll get in, the market will level a little bit. But if you're buying your forever home, what's it matter? You're paying one way or another. I'd rather be paying my mortgage than my landlord's.
Yeah, I think that's a really good point because, people have a concern about, is there a bubble? Is there a crash? I mean, we see it on social media. We'll post something and we'll get people commenting, oh yeah, market's going to drop 40%. And, the thing that I think is missing is, what are you basing that on? Like, what's making you feel like it's going to go down that much? Because it went up that much in the last 2 years. So you think it's going to have to go down. When you have somebody that has in their mind that's going to be a huge, huge drop, how can you overcome that concern that they have with other data? Like, what is the conversation like for you and a buyer that has that real concern there's going to be a huge drop?
Well, for me, being at like the Denver metro area, it's continually having new people in every day. So the population is growing and there isn't enough supply on our end. So even if you're looking at, they say it's going to drop 40%. I mean, our largest recession, what did the real estate market drop? 25%? And that was in our biggest recession. So I don't feel that it's going to drop that all the way down to 40%. There's no way that I'm not to say that there's no way that it can. I just don't see it happening with so much demand in the Denver metro area and the little supply. There's no way that construction can meet up with it. As we're coming into spring, we might see more and more inventory hit the market, but with that, the rates are supposed to also come back down a little bit. So that will also increase the demand. So I think it's just kind of mellowing out and kind of correcting itself like everything should at some point in time.
Yeah, I think everybody knew that we were not going to be able to have, 20, 30% appreciation rates keep going. I mean, that's impossible to sustain. But I think what I see a lot of people missing when they have these fears of a huge drop in the real estate market is look back and understand, 2020, 2021, there was a lot of reasons for there to be a lot of demand for homes. There was builders not building enough homes. There was people demographically aging into the age range where first-time home buyers typically go out and buy their first home. And that's going to continue for another couple of years. So the biggest segment of first-time home buyers kind of getting into that age range where they want to buy. And then we had a couple of things that were huge anomalies. We had COVID, so we had supply chain disruptions. So even less supply than we had going into the year. Builders weren't building enough homes prior to COVID. And then it really slowed down in terms of how much they could churn out. We weren't meeting the demand for the number of buyers of homes, even before COVID. Then you throw in ridiculously low interest rates, like unsustainably low interest rates, that fomented demand even higher, which caused even lower supply of homes. And so all those things contributed to all that. Now we're kind of back out of the low interest rate environment. We're into kind of a higher interest rate environment. So that's what slowed things down. But what we also know is those other things that cause the prices to go up, the low supply of homes, even though it's higher now than it was in the middle of 2021 and 2020, it's still lower than it historically is.
Yes.
Builders are still not building enough homes to keep up with the normal supply. And so, yeah, interest rates have gone up. So it's slowed some. But we know that with interest rates going up this much, it's going to cause a slowdown in the economy. It already has. I mean, you can debate whether we're in a recession or not. But what ends up happening in every recession is interest rates end up coming down, because as we kind of crash the economy, if that's what they're trying to do, the way to pull it back out is bring interest rates down, get economic activity going. That will end up turning buyers who've been sitting on the sidelines back into buyers, because, oh, now interest rates are lower, whether it's 1%, 2%, 3% lower than we have today. That's going to increase that demand and get those buyers back off. And then what's going to happen to home values? Even if they did go down, 5%, 10%, they're just going to end up going back up, hopefully not at 20%. But it's like the people that are sitting around trying to time the market for when things are going to bottom out, or thinking it's going to go down by 40%. I just don't think that they're looking at all the fundamentals that cause home prices to either go up or go down.
And I agree with that 100%. I mean, it's all about the right time for you as the consumer. And there is going to be a right time. Right now, I feel is a good time for those people that didn't have the reserves and have that big capital to come in and offer $80,000, $100,000 over asking. Yeah, they're paying a little bit more in an interest rate, but they're not paying that big lump sum right up front. So it's all really about, for me, timing of my buyers. And I think this is still a great time for my buyers to buy, because they're getting in, like I've said over and over again, and getting a quality house instead of just kind of dealing with what they could get in a competitive market. But like you're saying, it has to balance out. As we're crashing the market, so to say, the only way to bring it back is to lower those interest rates. And with those lowered interest rates is going to bring up the demand. And there we are again, having those same competitive situations, $80,000, $100,000 over asking. So is now the time for you to get in and get a quality house and win that contract and refi in the spring when it drops down? Or do you wait until it crashes, that perfect time? I mean, I don't know about you, but the batteries in my crystal ball died years ago. So I'm not exactly sure what's going to happen there.
Yeah. Well, and the thing is that the other piece of that people don't realize is, there's a lot of money sitting on the sidelines right now, just not from the typical buyers, but from some of these hedge funds and pensions and things like that were buying up houses like crazy. And they were doing it, in my opinion, kind of on an emotional, fear of missing out. They were buying anything they could get their hands on. I don't know if you haven't had any clients like that, but it's like, it almost didn't matter what price they offered. Like, they were just offering anything to get in there. And then what's going to happen is, if they're sitting on the sidelines waiting for things to level out or balance out or whatever you want to call it, or even come down a little bit, as soon as they feel like it's time, they're jumping back in. That's that whole other segment you're going to be competing with, and then you're going to be locked out again. So I think, everything that you're saying it makes perfect sense for people. But so the interest rate thing is the other piece that is a challenge for people, because obviously affordability becomes difficult. If you were kind of budgeting things on an interest rate that was maybe in the 4s and now it's in the 7s, that payment's gone up a pretty good amount. What kind of tools do we have in our tool belt to be able to help bring that affordability back for people, whether it's, concessions or buy downs, what have you?
Yeah, that's kind of what I'm doing on the listing side, just because, there is less traffic when it comes to my listings right now. And so I've talked with my sellers and I set expectations with every one of my clients, like, hey, this is what's happening now. And so this is a couple ways that we can combat this. And so I talk to my sellers and we offer up a seller credit to buy down that rate for the buyers, because if rate is the big concerning factor, why don't we attack that head on and try to take that equation completely out? It's not going to take it completely out. It's going to lower it a little bit. I mean, I can't bring it all the way back down to the twos, but we could bring it down the best that we can. And so I put that into my proposal, and I talk to my sellers and try to educate them in that type of situation. And now with the buyers, and what I also work on with that is in this situation that we're out shopping, the house has been sitting on the market for a little while. I also approach their listing agent with that same scenario, like, hey, we would like some seller concessions in this to buy down the rate. You go into that house has been sitting on the market long enough. They want to sell. Those people are wanting to move. They maybe were under contract already and got their hopes up. As soon as you go under contract, people spend that money already. So we don't know what their situation is. And I go in and I talk with the listing agent and see if there is some wiggle room, if there is some seller credits available that we could buy down the rate and get our buyers into a better position to offer on their home.
Do you see sellers being realistic, or are sellers still caught up in what they might have thought they could do 6 months ago?
The shoulda, coulda, wouldas.
Yeah.
Yes, definitely. The shoulda, coulda, wouldas. Like, oh, I shoulda listed 6 months ago. Well, you didn't, and here we are. So, but yes, there are a lot of people stuck in the FOMO for sure. They're wishing they did things earlier and so on. But I think they're coming to the realization where everything is at this moment in time. I mean, it's hard not to see it. I mean, I've seen it dramatically here in Denver. I mean, we were going 2 to 3 days on market. Now we're 2 to 3 weeks. So we're seeing the impact for sure of what's going on in the U.S.
Are your sellers getting a little anxious at that 2 to 3 week point? Is that?
Yes, I have one right now that's been on the market for 3 weeks. So far, I have not a lot of chatter from them, but I could tell by the text messages that they're starting to get worried. Luckily, the house is completely paid off, which is good. But they still have to pay the HOA. But yeah, you can see the little bit of hesitance in their voice and in their text messages of they wish they could have done things sooner. But it's just what it is. We got to push through it and find our way to the end.
Yeah, and sometimes, if people have the option financially, maybe they don't sell right now. Maybe they convert a property into a rental property and take advantage of, what we're kind of coming into a buyer's market now is get a good price on the next house that you're purchasing, turn the one that you have into a rental instead of having to take what you might perceive as a lower price than what you could have got and just kind of ride things out. And that might help people kind of maximize what they can get on the sale at a later date. Because I don't know about in your market, how's the rental market there? Is it still pretty high demand and rents going up?
Oh, it's crazy. I had a post the other day that I made asking people to tell me their rental amount, and I will find them a home that they can purchase for the same amount. And some of these rents that were coming back, and this post absolutely shocked me. I mean, they're paying $4,000 for a 2-bedroom, 1 bath. I mean, depending on not here in Denver. There's people commenting all over the U.S. That one was in Long Beach, which I was like, holy smokes, that's absolutely insane. $4,000 for a 2-bedroom. I can't believe that. I mean, my mortgage on my house is, I pay my taxes and my insurance in full outside of my escrow, but I'm still at $2,400 a month. And I'm like, man, for $4,000, gosh, dang. I mean, for a 2-bedroom at that, I can't see myself doing that. But yes, rental rates here in Denver are still really high. I mean, to get a 2-bedroom, 1 bath, you're still paying around $18,000, some places up to $2,500 a month.
Wow, that's crazy. Yeah. And I mean, it just goes to show that, people have to live somewhere. And so, you can say that, hey, this isn't the right market, rates are too high, prices are too high or whatever. But then your alternative is to rent, for like $2,000, $3,000, $4,000 a month for something less. And you're not gaining anything out of that. Like some of the, talking heads or the celebrities out there that like to say that, buying a home is a terrible investment and all that kind of stuff. it surprises me to hear it, but then what they always leave out of their discussion is, well, what are you going to pay for housing as an option to not buying? Like, what are you going to pay for rent? And what is that doing for you? Oh,
Yes.
yeah, you can pick up and leave every year. Sure. And if that's your nomad lifestyle, then maybe that is the right way. But yeah, I mean, it's just like crazy what you have to pay in rent. And you've got to do that if you don't buy.
Yeah. Like this is my line, and I say it all the time. You're always paying a mortgage. Is it yours or your landlord's? Simple as that. You're always paying a mortgage one way or another. And the one thing that you will never get back with rent is a return. You may get your deposit back if you're lucky. In most cases, you won't even get your deposit back, but you will never get a return on your rental. What do they say? A rental is 100% interest. When buying, at least you're paying whatever that current rate is, but rent is 100% interest.
Yeah. So if you've got somebody that is talking to you about potentially, thinking about selling, and obviously they might have their expectations a little high based upon what we came through. Hopefully they're realistic, but it's got to be a little bit of a challenging conversation to be the one to break the news to them that, hey, you're not necessarily going to get what you thought you were going to get. And if you're competing with another agent to get that listing, like, how do you go about that conversation to help the consumer understand who's the right agent to choose? Because, some agents, they take the approach of, I'm going to say that, yeah, we'll list it for whatever they want to list it for, even if they know in their heart it's not going to go for that. And they're just going to plan on doing price drops in a few weeks, and it gets them the listing. They may not have a happy client at the end, but it gets them a listing, versus someone who might be realistic and say, hey, listen, this is where we're at. Here's our strategy. Like, what's that conversation like with a seller to kind of help them through that decision-making process?
For me, I like to educate as much as possible. I try to let them see what I see. I know that I'm the professional, and I know my market, and I know what to expect. I also try to dig in and do as much research as possible and not base my numbers off of older data. Because I mean, if you're trying to do comps right now of houses that sold back in January, it's a completely different market. But I try to educate my clients through that, and so I will walk them through what I'm seeing on the market and show them what is selling right now in today's market as far as their finishes, their location, the square footage, their yard, and really set the expectation for them. As far as competition goes, my work ethic and who I am kind of speaks for itself. I don't really, if they choose to go with somebody else based off of a amount of money paid on a commission, then that's their choice. But as far as a work ethic goes and what I try to help my clients understand and educate through the process, I think that speaks for itself. But yeah, I think education is key. Communication and education, letting the people and clients understand what is really happening in the market and what to expect. It's never a surprise if you already set that expectation up front. Though that other listing agent that said, hey, I'll sell it for the amount that you want, and then all of a sudden it's a surprise that they have to reduce, and then they have to reduce, and then they have to reduce, and they sat on the market for 3 months. That is more of a shock than, hey, this is what the market's doing. And so being upfront, honest, and setting that expectation from the get-go is definitely key to my success.
Yeah, and that's a challenge for the consumer because, people want to hear what they want to hear a lot of times. They don't want to hear the reality. They want to hear, what they want to get. But sometimes consumers will lose sight of the fact that, and it's the same thing that goes along, you kind of touched on it a little bit there about, brokerages that may come in and say, hey, we'll do this for, a reduced commission or a flat fee or what have you. It really doesn't matter what the commission percentage is that a real estate agent or brokerage is going to charge you or what they tell you they're going to sell it for. At the end of the day, it really just matters what your net is. Like, what are you going to take home out of the transaction? And what sometimes consumers forget or maybe don't realize is that, if you put a house on the market and you set it above where everything else, is selling at, and it sits there, you immediately have, like a scarlet letter attached to that house. Like, something's wrong. Why is this thing sitting on the market for 3 weeks, 6 weeks, 9 weeks? And people just won't even look at it. And so that's where I think consumers got to remember, like, try to figure out what is that track record, ask agents, like, show me like your last 5 listings, like what's your price history on these. I mean, those are some details that I don't see people asking. But if you see somebody that's got, their last 5 listings have, 5 price drops on every single one of them, then that might not be the right person for you. Like, a price drop's okay. Like in this market, it's not unusual. But if you see a pattern, then that number that they're telling you up front, or that flat fee commission, isn't going to net you the most money, is it?
No, exactly. And and that's just it. I mean, looking back at my last 5 listings, everyone went over market value. And that's because I set the expectation up front. There's also doing the research on your realtor is key. I have a listing that I am working on right now. They just took it off the market. They didn't think the realtor was marketing the property correctly. There wasn't enough showings. I went in and kind of set the expectation and talked to them about what's going on in the market. But I also did my due diligence and looked at the agent stats. In the past 2 years, has only sold 2 properties. I'm like, well, that's your problem right there. I mean, do your due diligence, just like we have to do on our end, and do our due diligence on finding out what the property is going to do in the neighborhood as far as comparables are concerned. You do your due diligence on your realtor. Make sure that they have sold transactions in the last year, that they're doing business, that they are engulfed in your market, and know what's going on. Just because they have their license doesn't make them a professional.
Yeah, I mean, Aunt Sally got her license a year ago to kind of take advantage of this. Isn't she like the best person to sell my house?
Yes. Yes.
Yeah, I mean, it's
as well.
I mean, that's the important thing, is like really like dig in and do that research, because, and it's not really the, I mean, number of transactions is a good thing, but like length of time in the business too is not necessarily an indicator of how good somebody's going to be, because I have agents like, oh, I've been doing this for 27 years. You don't have to do this. You don't have to do that. It's like, okay, really? And then you go look at numbers, and yeah, they've done 27 transactions in 27 years. Like, that's not somebody who's in this full time, who has enough experience. But the other side of it too is, even if you've got someone that has a decent number of transactions, that would seem to indicate that they've been able to do a good job, but they've been in the business for 3 or 4 years, that also may not be the right person either, because they've not really been through a cycle like we're in right now. True. And the last couple of years, it didn't take a whole lot to list and sell a home. You've got to actually be able to market a home, have the right pricing strategy to be able to get homes sold in this market. So it's kind of a combination, don't you think, of like length of time in the business and number of transactions?
Yes, no, I'll agree with that as well. Because a lot of people have it, like you were saying, the market the past couple of years, you could just throw it up there and you're under contract in a couple of days. Well, they didn't have to go through the marketing, the door knocking, the canvassing the neighborhood, so on. They haven't had to go through much of that. So I agree on the length and the number of transactions. What I like to say about this as well is it's a practice. I have a real estate practice, and what is that practice? Is it right there? You have to practice. You have to be continually engulfed in your practice to know what you're doing. And if you have somebody that's not practicing and not selling properties, are they going to do the best job for you?
All right, Allen Iverson is just going through my brain now that you said that.
It's true.
Practice? Talking about practice?
It's a practice. It's like you have a medical practice. Are you going to go to somebody and get a brain surgery on somebody who's only done a couple brain surgeries? Or are you going to go to somebody who's a doctor that has been in the business for years and has multiple procedures under his belt and is practiced?
Yeah, no question about it.
You want to buy a house, but high interest rates have got you down? Take the rate challenge and send us a verifiable loan estimate from another lender, and we'll beat it and pay for your appraisal up to $600. Here at Give Mortgage, being powered by U Mortgage allows us to provide you with unmatched speed and efficiency and the best rates and fees in the market, all while delivering you the concierge level service you deserve. We want you to have an experience getting a mortgage that you'll never forget, and not because you got put through a meat grinder to get it. At Give Mortgage, we give great advice, we give the best rates, and we give back to charity. Visit us at www.give-mortgage.com or call us at 480-331 4684 to schedule a free consultation to see how we can help.
Kind of switch gears here over to the buyer side, because I think that's, right now, if somebody wants to sell a house, it might be a bit of a challenge. If somebody wants to buy, they're going to have a better opportunity. But then there's a whole segment of buyers out there that, maybe just didn't even try because of everything they heard over the last couple of years. And now they're trying, and maybe they're running into some challenges. You do something that's a little bit unique from what other realtors do in terms of helping people get prepared for that. Can you kind of give us a little bit of your background there and what you do to help people get themselves in a spot where they can buy?
Yeah, of course. Before I even got into real estate, I ran a credit repair company. As I got into real estate and started generating leads, I realized how important credit repair actually was in this process. There's so many people that want to buy and just don't know the first steps. They don't know where to start, and they realize that their credit really isn't in the position to do so. So I also kept a credit repair business and started my own after getting into real estate. And I help buyers get their credit where it needs to be to qualify for a loan. And so I walk them from the beginning stages all the way to the end. So I help them work on their DTI, I help them work on their credit, I help them work on a savings so they have money for a down payment, and I kind of educate them through the start to finish of home ownership. And in doing so, at the end, once they complete and they end up getting approved and purchasing a home with me, I offer up to 1 year's service fees credited back to them at closing as a buyer agent credit. So I try to help them from start to finish, and then I give them a gift back to help them out. Now, 1 year service fees in my credit repair program isn't a lot, but it will help pay for an appraisal. It'll help pay for an inspection. It may even contribute to buying down that interest rate if needed. So I try to help the consumer from start to finish, because that was one of the biggest things for me, leaving the islands and moving to the mainland here, is that American dream of buying a home. But I had no idea where to start because it was always out of reach for me in Hawaii. Back home in Hawaii, the median household price is just over $1 million. So for me, it just didn't seem obtainable. And coming out here to the mainland and trying to figure out how to achieve that dream, it would have been really nice to find somebody like myself that could have helped me from the beginning stages all the way to the end. So that's what I try to do, is give back and help people like myself. When I started out, I had no clue getting into the real estate world on how I was going to achieve being a homeowner.
Yeah, that's the tough thing is, as kids growing up, like even through college, there's not really a whole lot of financial literacy education that happens. Like, I remember way back when I was in school, we got taught how to balance a checkbook. Like, I don't think kids, even in the last 10 or 20 years have learned that skill, like you can spend the money that you have on your debit card and then get a credit card and you can keep charging away. It's like, they don't teach how to budget. They don't teach how to manage credit. They don't teach you what it takes to actually like get a piece of the American dream. Like you said, how to buy a house. I think doing that home buyer education and consumer education is really, really important. For people that are listening that might be in that spot where, hey, they really haven't got any credit established. They haven't really taken that first step. What's the first couple of steps you can tell somebody to do to start establishing some credit if they really don't have any?
So there are a few different ways that I recommend going about that. If they're brand new, like 18 years old, kind of getting into the credit world, I always suggest a secured credit card. And that is kind of like a prepaid credit card. There you are supplying your own credit limit. You're depositing your own money onto this card and furnishing your own credit limit. And it reports to the credit bureaus just like a normal credit card. So that is one step that I would do. Another is if you do have somebody with good credit, make sure it's not bad credit. You could also become an authorized user on their card, which will help establish a credit history onto your credit profile. So if you don't have a strong credit history, but you have somebody in your family that has great credit and does have a strong credit history, you could be an authorized user on their account. I do not suggest giving them a credit card, but putting them as an authorized user on their account does help in building that history for their credit profile. And then getting that secured credit card of their own and creating good habits and spending habits on that. With your credit card limit, like you were saying earlier, in school we were taught how to balance a checkbook, but the only time I use a checkbook nowadays is for photo day for my kids. Go and find it. It's in the cabinet. It's dusty. I haven't written a check in a year, but nobody really taught credit in school. And so one of the biggest tips that I've learned is with your credit utilization. Best practice in credit utilization is to keep your balances below 30%. And so an example of that is if you have $1,000 credit card, you never want to spend more than $300 on that credit card before you pay it down or pay it off. Because that 30% is that sweet spot. That's where you're going to get the most bang for your buck. But nobody was ever taught you that. Nobody taught you that. I was like, I got $1,000 credit card. Woohoo! To the limit. Here we go. But it's just the education that I think really lacks in the credit field. And I try to help and educate and teach people how it's done so they can better improve their lives and get and obtain stuff like this, buying a house.
Yeah. Another thing that I always tell people to do, in addition to the things that you talked about, is put that payment on automatic payment on that credit card.
Yes.
Because you don't want to screw up and miss it.
Yeah. Even if it's the minimum, like don't forget, don't miss it. Even if you got that minimum set up on an auto payment and you want to pay more, totally fine. But make sure that payment's on time. I had a recent credit client. Luckily, I was able to fix and remedy this, but we were under contract for a $750,000 home. Came to me at low 500s. I got a score up to the high 600s. We went under contract on a home, and he had a late payment of $25 on a card. Man. $25 is going to jeopardize this $750,000 home.
Yeah,
we were able to remedy it, but holy moly, pay your bills.
Yeah, I mean, the automatic payment thing is so important to me because if you want to pay more, they're going to take your money whenever you want to send it to them. Like you can always pay extra, pay 2 times a month, 3 times a month, whatever you want to keep that balance down to that 30%. But just don't miss the payment, and the only way to make sure you definitely don't do it is put it on automatic payment. What about too, we run across people a lot of times that have collections. And so a lot of times people will come to us when they're talking about qualifying for a mortgage and they're like, oh, I'm working on my credit. For me, it's always like, hold on. Like, please don't try to do this yourself. If somebody goes and tries to take care of things on themselves, what are some of the risks that they run of kind of hurting themselves by managing that process on their own without some professional help?
Well, one, I've seen people delete positive items as well. So they've gone through and I'm going to do this myself. I'm going to get this taken care of. And they go through and they'll delete the whole account. Well, just because you had a couple late pays on here doesn't mean that whole account was derogatory or negative. And so they've gone and removed positive credit, which could be extremely detrimental to their credit profile. Another thing is with collections, you got to find out who actually owns the debt. So here's an example. Creditor, you got ABC Credit is offered you this line of credit and you've had that credit for a while and life happened. We went through a recession, whatever may be happening. You couldn't pay your bills and it went into collections. Well, that ABC Credit, after 90 days or so of not being able to collect your money, they're going to go and sell that off to a collection agency and they're going to write it off on their taxes. So now ABC Credit doesn't necessarily own the debt. The collection agency that purchased that debt now owns it. So you're going through your credit profile and you see, XYZ collection agency, you see ABC Credit. You're like, hey, that's who I know is ABC Credit. I'm going to go and pay them. Well, they already sold it to the collection agency that owns it. And now you've paid the ABC Credit and giving them their money. They're going to take it. Of course they are, but they're not going to do anything about cleaning up your credit profile because they don't care. They sold it off already. And XYZ credit collection agency is still going to be coming after you for the money that you owe them because they own that debt. So that's another thing that could really get botched up. I've seen people pay companies that it wasn't going to improve their credit profile and it wasn't going to clean it up.
Yeah, some of it, they pay off a collection that might have been like 3 or 4 years old, and paying it off just basically puts a new date on it, re-ages it to something recent, and then it drags their score down, and they wonder, I was paying stuff off. What happened? I thought I was doing the right thing.
Yes.
But there's been a change a few months ago this year regarding medical collections. Can you kind of touch on that?
So yeah, medical collections is, I forget what the exact number is. I'd have to go back and find it out, but there is up to a certain amount cannot be reported to your credit profile. I gotta research that one more time. Sorry, squirrel, my phone's going off. I apologize. Yeah. Yes, medical collections. Where was I? Medical collections. I'd have to research that again and see what the exact number is. But I recall that there's a certain amount that cannot be recorded to your credit profile, and I forget what that amount is. I'd have to double back on that.
Yeah, I think it was $500 if I'm not mistaken. And then the other thing too that I noticed is that if you do pay it off, now it has to be deleted entirely. That was a big battle, in the past where, you'd have to go and try to negotiate these pay for deletion letters, basically saying, hey, if I pay this, will you take it off my credit? Sometimes it worked, sometimes it didn't. Now, at least with the medical collections, if it does get paid off, they've got to take it off. So that should make things a little bit easier for consumers.
Yeah, that's the other thing that we're saying, that where people can make mistakes as well, is if they just go in and start paying stuff off and they're not asking for that pay for delete and getting it removed from their profile. It will still show as a collection, but it'll be a satisfied collection, but it's still going to show there. We want to make sure that that's completely removed from their profile. And that way it's just like it never happened. And so this is another spot where people, the consumers, can hurt themselves by just going in and going after things themselves without the full knowledge of what to do. Because there are steps and procedures just like anything else.
Yeah, it's a negotiation. And that's the thing that people don't realize is as soon as you part with your money and you give it to them, you lost all your negotiating leverage. If you've got money that they want, then you can ask for things in return. And that's where, so anybody that's listening that's, thinking about trying to buy their first home and maybe have some credit issues or lack of credit, like for me, first thing you need to do is talk to a professional in this industry, talk to an expert about it, whether it's credit repair, mortgage. You're probably a little more knowledgeable on this stuff than most realtors. It's not usually the forte for most realtors. That's why we always try to say, start with somebody in the mortgage side, because if you want to buy the house, unless you're paying cash, you're going to need to get a mortgage. Yep. So talk to a mortgage person first, because most of them are pretty well versed when it comes to credit. And even if they can't personally help you, they can probably connect you with a good credit repair specialist to point you in the right direction. So one last thing I want to ask you before we kind of wrap things up here is, where we're at today, what do you think, if you had to come up with one thing that was something that most people don't understand about the real estate process, but is really important for them to know, what would you say that is?
Well, on the buy side, the one thing that I always get asked, and I think for myself is just common knowledge, is they ask, well, how much do I owe you? As a buyer, you don't pay me. The seller pays me. And so that is one thing that I think is, I guess, a good tidbit for anybody to know is, speak to a professional. We work for free until you close on the home. We're here to earn your trust, earn your business. And so reach out, talk to a professional. I think that's most important. And it's not going to be a bunch of money up front. We're here to help you and get you to the finish line. And that's where we get paid.
Yeah, I think that's a really important point that, we do hear that a lot is, sometimes buyers will think, well, I'm just going to go straight to the listing agent and, see if that will save me some money. And, the reality is, like, yes, that agent can do what they call dual agency and represent both parties. They're supposed to be impartial, and I'm sure most of them try to be. But the reality of the situation is that the seller is paying that agent. And if there's going to be any kind of loyalty, it's going to fall to that side. And if you're not going to have to pay for your agent to represent you independently to negotiate, which right now you really need somebody to negotiate on your behalf because you can, and you haven't been able to for a couple of years, like, find your own agent. Don't go use the agent that's representing the seller. It's just an inherent conflict that will be hard for them to navigate as much as they might try to be able to do it. Go find your own agent. It's not going to cost you anything. It's probably going to save you a lot of money if you do that.
Yes, and that's exactly it. I mean, the listing agent's fiduciary duty is to the seller, and you need somebody that has your back and is going to fight for you through the transaction. And the listing agent is not necessarily it. Like you were saying, they can be a dual agent or a transaction broker, but in the end, the person that's paying me is who my loyalty would be with. So,
human nature.
Human nature. Like, you're the one that's taking care of me. Okay, I'm on your side.
Yeah, so. For sure. Well, so if someone's been listening to us today and they think like, hey, I think Dallas might be the right person to help me out, what's the best way for people to reach out to you and contact you?
Well, you can call me at 303-476-3081, or you can find me on all social media avenues at Ohana Style Home Group. I am from Hawaii, so I try to keep that Hawaii vibe alive here in Colorado and in Florida. So Ohana Style Home Group is where you'll find me. I'm on all social media avenues, or you can call me 303-476-3081.
Awesome. Well, I appreciate you joining us today, Dallas.
Yeah, not a problem. It was good. It was fun.
Good deal. Well, thank you guys for joining us again. Join us next week for another episode of the Uncensored Real Estate Podcast. And make sure that you subscribe, give us a review, and share this with any friends that you know that are thinking about buying or selling real estate so we can help them out and get some good information out to them. All right, you guys take care, and we'll see you next time.
Aloha.
Thanks for joining us, and please remember to go and subscribe, like, share, all that cool stuff to help us grow, and come back to listen to our next episode. Until then, go out and live life uncensored.
Thanks for listening to the Uncensored Real Estate Podcast. Don't forget to help us out and subscribe. Follow and give us a 5-star rating on your favorite podcast platform. And check us out on YouTube for the full video podcast. If you want more information on any of the topics discussed on today's episode, email us at uncensoredrealestatepodcast@gmail.com or give the Cardenas Mortgage Team a call at 480-331-4684.